In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization, one with two programs, one program being the exhibition and sale of crafts, the second being the education about crafts. In prior presentations, we have entered the journal entries, the transactions, the financial transactions related to a time period. Then we did the closing process. Now we're going to take a look at the financial statements, starting with the statement of financial position, which is similar, or in essence, the balance sheet. You'll recall if we scroll back over to our trial balances, we had three sets of trial balances here. We had the trial balances that we first entered all the data into, and then we left the expense accounts down below. So we have the expense accounts down below grouped by expense categorization. And then we copied these numbers to a trial balance, the mid trial balance here, the one that we will be primarily working with. So this middle trial balance is the one that we will generally be working with for the financial statement creation. This trial balance began with the beginning balance in the prior trial balance, and we reallocated. The main thing we did here, in essence, or the main thing we did was to reallocate the expense accounts from an expense account grouping by expense account to the grouping by the programs and the supporting activities. So the programs and the supporting activities, exhibition program, community education management, and then the fundraising. And then finally, we took this information, have a third trial balance where we entered the closing entries. So these are the closing entries, meaning we closed out these temporary numbers, the income statement type numbers, the activity numbers, and we close them out to what would be equivalent to the net income or the equity or the net assets in this case. So what we're going to do now is basically similar to the balance sheet type statement, which is the statement of financial position. And we're going to be working with this middle trial balance. It's going to be in row 39. And we're going to work with this, and we're going to bounce around a little bit to another financial statement, mainly when we get to the equity section. It's going to help us to fill out or figure out the equity section. Also note, as we do this, we are starting with the statement of financial position similar to the balance sheet. Some would say that you should start with the statement of activities similar to the income statement so that you can use the end or bottom line numbers to help create the equity section. I'm arguing that the balance sheet is a good place to start because it allows us to start from top to bottom, record something from top to bottom, be in balance, and then figure out the income statement after we've already found something that's in balance. Now, I'll talk about the pros and cons on the two methods as we go through. Once we get to the equity section, we'll be able to see what we're talking about between these two methods. But I'm going to start here with the statement of financial position, which is going to be the balance sheet, and we'll just go from top to bottom. We'll end up with something that will be in balance, and then we're going to go to the statement of activities next time, which is going to break out more detail with regards to what would be similar to the equity section, the net asset section here. All right, so here we are. We're in the statement of financial position. We're going to start with assets, as is typically the case. And then the first asset will, of course, be cash. We're going to go through the green items from top to bottom. So I'm going to pick up the cash, and that amount I'm going to put in this column. This doesn't represent debits and credits. It represents the subcategorization. So we are in V41. I'm going to say that equals that 4,229. Next, we're going to have the short-term investments. We're just going straight down the line to short-term investments, which is the next one in line. And that one is going to be equal to that 9,811. So the 9,811. Next, we're going to have the grants receivable. Grants receivable is going to be equal to the 5,960. Then we're going to have the prepaid expenses. That is going to be equal to the 960. Next, we're going to have the equipment. Now, I'm going to put the equipment on their net. So what I'm going to do is I'm going to copy the equipment, so I'm less likely to misspell it. And I'm going to paste it 1, 2, 3, so it doesn't turn green. And then I'm going to type the word net. And that means it's going to be net of the accumulated depreciation, or in this case, it's called the allowance for depreciation. So we're going to take the cost minus the allowance for depreciation, or the 8,492. So I'm going to be over here in V45. I'm going to say equals the sum of these two numbers. It'll subtract it out because that's a positive. This is a negative. I sum them up. It'll subtract them out. And so there we have that number. Now, the next asset we had was a restricted asset. This is a long-term investment with donor restriction. So therefore, we're gonna say that this is gonna be restricted for an endowment. And then we're gonna, in this subcategory, we're gonna say this is, let's just call it investment. Investment. And we'll pick up this number, which is gonna be the asset of the 5887. That will give us then our total assets. So we'll have the total assets here, and I'm going to sum up this entire column. This is going to be the sum of equals the sum, using the trusty sum function, of the entire column of the 35,339. Next, we're going to have, of course, the liabilities. So liabilities in orange. I'm going to pick up the first liability, which will be the accounts payable and accrued expenses. We're going to pull them into the inner column, not because they're debits and credits, but because we want to have the subcategorization. These are negative numbers here because they're credits. We don't want credits in our financial statement, so I'm going to flip the sign by, instead of saying equals, saying negative. Negative of that 2,969.26 is that number, so we just flip the sign. And then we're going to take the deferred revenue. Same process. We're going to say negative of that 6,020. There we have our liabilities. We're going to sum that up to give us the total liabilities. And we're going to use our trusty sum function in cell W53 equals the trusty sum. Picking up those two numbers. And that gives us our total of 8,946. Now we're in the new thing, the different thing, the bit confusing thing, the part of the balance sheet or the statement of financial position related to what would be equivalent to the equity section, this being the net asset section. Now this is the part where people would argue, well, you need the statement of activities in order to calculate the breakout of the net assets between the net assets with restrictions, without restrictions, and whatnot to properly record that. But we here, of course, have already done that with the closing entry for number 1. So we can go straight to this, and even if we had not yet done that, we could put the total in. I would still argue that it's good to put the total in, start with something that's in balance, because then when you go to the statement of activities, the income statement type of account, you really figure it out just a component of something that you've already put in balance, and I think that's something easier to do personally. So what I'm going to do then is we're going to put these 3 accounts. If we had not yet done the closing process, then we could do this in this format. You could say, okay, I'm going to start with the statement of financial position, and I'm going to basically put in the net assets first, and then go to the statement of activities if I need that in order to break out the breakout between the with and without restrictions. So to do that, because you'll note that just like in a for-profit type of organization for the equity section, you know that assets minus liabilities obviously equals equity. And we know that all the blue accounts are going to equal equity, in this case being net assets, same as equity for a for-profit. All the blue accounts is going to equal total equity. So that 26,393 should be total equity, which we just simply need to then break out between the with and without restrictions. So we can kind of double check this by just summing up all of the assets here. I could put the total here and say, well, I know the total is the sum of all of this, right? I know all the blue accounts have to total up. You have to break them out in some format, but they have to total up here. And then I can check at least to see if I'm in balance, because then I basically found a home for everything. So I could say, all right, let's see if we're in balance then, if we do that, because that'll make me feel good that I'm making progress. So we can sum up the liabilities and the net assets then, and we get to the 35,339, which obviously ties out up here. Then we just need to break them out, which we could then go to the statement of activities in order to break out this 26,393 total between these numbers. Now also note that this was easy to get. This 26,396 was very easy to get. Why? Because the format of the trial balance was in terms of debits being positive, credits being negative, which means all you have to do is sum up the column. If it's not in that format, you have debits and credits, then you do have to do a little bit more work because you'd have to take the credits minus the debits. But if you have this format, really easy to do, And so therefore, I would take advantage of it if you do have that. Now, we already know this breakout because we did the closing entries. So if I take a look at the trial balance down below, where we closed out all these temporary accounts, I'm going to go to the trial balance down below, the closing trial balance. You'll recall that we closed out all the temporary accounts, the dark blue accounts, to the net assets similar to the equity section, and we end up with the ending balance in our post-closing trial balance here with the net assets without restrictions and then the restricted net assets here. So this is our breakout. We can then use this to fill in our equity numbers in terms of the breakout between with restriction and without restriction. Let's take a look at that now. Let's do that now. So I'm going to go back up top. I'm going to say the ones without restriction is going to be negative to flip the sign, because I don't want a negative number here. It's going to be a negative on the trial balance, and we're going to flip the sign to make it a positive. So there's that 8558. And then I'm going to take the one with restrictions for the program. This one has restrictions for the program. I'm going all the way down to the last trial balance down here with restrictions to the program, 11948. And then the next one's going to be with restrictions for the permanent endowment. So we're going to scroll back down, pick that one up. And then those three should, of course, add up to that 26,393. We can recalculate this and see if this number then ties out. So I can say this is going to be equal to the sum of these three, which would be that 26,393. And now this total assets ties out to total liabilities and net assets. This number we can see is the equivalent of all of the blue accounts here. If we add them up to the 26,393, 26,393. So now we have, of course, the assets equaling the liabilities plus the equity. Everything looks good. Next time, we're going to move on to the statement of activities. We have, in essence, found a home for all of the balance sheet type of accounts, all the accounts up top. We kind of found a home for these dark blue accounts, but not really, because we need to go back and break them out and give them their own home. They're all kind of hanging out in the net asset area, and that's too many accounts in the same spot, so they want their own home. And therefore, we're going to do the statement of activities similar to the income statement, breaking out the net assets into more detail.